afternoon, YouTubers. Welcome again to my channel. Last time I was talking about investment platforms, and today I'll be discussing what to do on these investment platforms. Today is the 1st of November 2020, and for those of us who are in United Kingdom, we're going into a second lockdown. This is a good and a bad thing. There's money to be made in this type of situation, believe it or not. But you need to know which side you need to be on when this type of thing happens, that we're going into a second lockdown. Some other people are actually celebrating and they're going to be making money from this situation if you played your cards right. And hopefully, I think, okay, that'll be the next video that I'll discuss after this one, on how to make money in this type of situation. So subscribe and catch me on the next video, and then we'll be talking about how to make money when other people are celebrating and other people are crying, how you yourself can use this type of situation to your advantage to make money in this type of situation. Right, so today we'll be talking about what to do on the investment platforms that I talked about in the last video. So when you're on the investment platforms, there's things you can invest in. The three main things you can invest in are stocks, bonds, and mutual funds. And that's what I'll be talking about today. We already discussed what stocks are, but for those who did not catch that video, I'll just reiterate and just to go over it again. A stock entitles you to part ownership of a company, and typically you buy stocks, now you're a shareholder and you own part of the company. So if you buy stocks in Apple, you own part of Apple the company. And stocks can be bought on the stock exchange, or sometimes companies give people what they call stock options. So stock options, so let's say you work for Sainsbury's, and Sainsbury's want to issue some shares. They'll offer you shares as the employee at a discounted price, and those are share options. So stocks entitles you to, you become part owner of the company, and these are bought on the stock exchange, and you have voting rights in some instances, and you also get dividends. Bonds. Bond is a loan, or IOU, that can be traded on the financial markets, on the stock exchange. If a government wants to borrow money, typically it will issue bonds. So bond is like a loan. You buy a loan from the government, and then there's a time period. Let's say this loan will mature in maybe 2 or 5 years. When they say the loan will mature, is just saying the time is up. So these bonds will have a time frame, and when the time comes to an end, they say the bond has matured. And that's how you make your money. So it's, you get the initial money that you put in plus interest. So a bond, there are two ways you can get paid in bonds. There's one where you buy the bond, and then when it matures, you get your money back plus interest. Or you can have a type of bond where they say you're getting coupons. You get paid small amounts on a regular basis, so maybe monthly the money will be going in until the money goes to the amount that they borrowed from you plus interest. It's the same thing. It's just you're getting your money that you put in plus interest. So those are bonds, and they can be bought and sold on the stock exchange. And then there's mutual funds. Mutual funds are companies that pool investors' money. Are companies that pool investors' money to buy stocks and bonds or even short-term debt on the stock exchange. So if you watch that show Billions, and you hear when they talk about X Capital and all that, X Capital is the company, that's the mutual fund. So there are different types of funds. There are ETFs, there are hedge funds, but basically, to break it down and simplify it, a hedge fund is a company that pools investors' money and they buy stocks or bonds or short-term debt, and the combined holdings are known as a portfolio, and investors buy shares in this company, this hedge fund. As an investor, the question you need to ask yourself is, which investment vehicle do I want to use? Well, that depends on your goals and how much money you have and your appetite for risk. Stocks. So let's say you pick stocks, for instance. When you pick stocks, you're looking for growth, potential to earn, and you also have high potential to lose. In general, a good company will increase in dividend over time and the stock price will go up. So stocks are there for those people who have appetite for risk and who want to see their money expand faster. And then let's talk about bonds. Bonds are for those people who have probably lots of money and they're less risky. So if I was a gentleman of an age and I had millions and millions of dollars, I wouldn't want to risk it in the stock market. I'd be more like put my money in bonds, because I've already worked and I've earned this money and I've accumulated my wealth. All I want is security now. So why would I risk my money on the stock market? Because, well, bonds are not typically chosen by people who want to grow their money fast, because the interest on bonds is affected by the fiscal policy in that country at that particular time. So what I mean is, so right now, the interest rates, they're quite low in UK, and I think the highest paying bond is 1%. Imagine that, 1%. So you put your money in there for 5 years and you'll be earning 1% per annum. It's a joke. But what's 1% of 10 million? Now we're talking something different. And then funds. Funds gives an investor exposure to lots of shares, because the fund managers, the so-called experts, invest your money in different shares, in different bonds. They might even buy loans. So mutual funds, well, funds are sort of for, I'd say, the in-between. So you don't want to risk your money in the stock market, but also you don't want to be too risky. So funds, I would say, are middle ground. But you still don't have a choice where your money is put. So you just put your money in the fund, and then you just hope and pray that whoever this guy who's running the fund is investing your money in the shares that won't make you a loss. So I'm not for funds in that aspect, because funds are slow as well. And if you don't have a good fund manager, you might end up getting less than you put in. So I'm not really one for funds, but if you want your risk to be shared and spread out, maybe you can go for funds. I'm more for stocks because given my age and my appetite for risk, I want to expand my money and I have time. So if I make a loss at my age, I still have time. Well, that's what we assume. I still have time to make my money back and to build my wealth. So I would go more for stocks if you're of a younger age. But if you're, let's say, in your middle ages, well, we won't go into what's middle ages. Whatever you think is middle age, fine, works for me. Your middle ages, I would go more for funds because they're risky and they give you exposure to shares and all these things, but they're not too risky. And if you're of an age, I also won't go into what of an age means. Whatever you think is right, I'll agree with that. Of an age, I'd go for bonds because they're less risky, there's less interest, but you are not affected that much by the up and down that shares are exposed to. Some shares in a day can be up 10%, 20%, 70%, or they can be down, inversely, they can be down 10, 70%. And if you don't have the heart for that type of thing, because it's high blood pressure, I tell you, watching shares go up and down. Sometimes your portfolio, my portfolio has been down £10,000, but you just have to sit and wait, and that's just the way the stock market works. So if you don't have the heart for that, invest in funds, invest in bonds. But if you have the heart and are willing to make super profits, like people have been doing of late with companies like Tesla, go for shares. So at the end of the day, it's up to you. So now you know what an investment platform is and you know what you can access in an investment platform. The next thing I'm going to talk about in my next video is how to make money when other shares are going down and other people are crying. How you can make money and be laughing at the end of it. So stay safe. I hope that you're well. And hopefully this pandemic will soon come to an end. Stay safe.